you doing? Post Halloween, so we're live on YouTube as well. So, Sunday mornings, I like to keep it simple, cover the basics. Let me move this over of the money flow. Now, as we go through this, if you're new to this, if you're new to what I'm doing, I'll primarily talk from a trading perspective, but understand my buy and hold. I'm doing the same thing, just not as aggressive. Like morning. So I'll talk as trading, but understand there's some gray areas where, so primarily with buy and hold, I'm just looking at the buy spots, not the sell spots. Make sense? I might I might shave a little. You'll hear me use that term, shave a little. That means if I've had a buy and hold stock just run away, I might shave a little. Usually if I'm doing that, I'm looking to add it to something new, and we'll talk about that. Like say, I don't, in my buy and hold, take your time building that. I think when you first get going, you should probably put together a little portfolio, 10, 20 stocks, however much you want to spread your money around, and then add to them as I add to them as they set up, as they sell off, as they go extreme. I'm not looking to get rid of them when they have problems. I'm looking to buy more. So if you hold something over a long period of time, 10, 15 years, that company will mess up. The CEO will do something wrong. They will have problems. A lot of people will sell off those stocks, which is not buy and hold. Like you're messing up when you're doing that. So buy and hold shouldn't be something you're reanalyzing every day. Once you buy these stocks, it's ride or die. I mean, that's the whole point of it. And you want to use the bad times as a chance to add to your stocks. Okay. I get a lot of questions about buy and hold. Are we selling it? It's like, no. That's the definition of buy and hold. I mean, I don't know how many times I've rode forward to $2. The if you if you're on YouTube or Instagram, whichever, if you click my bio link, it'll take you to this stuff like the newsletter, my book. This is the boot camp we're going through, but that's the book, right? And you can get these things. The basic concept of the money flow is that prices move in 4 stages. And if we let's pull up. Let's look at it. I'm trying to think of some of the most obvious ones recently. OPK is pretty obvious. If we look at this, and you can see, you almost can start to see a pattern emerge, right? So in my trading, this is what I'm looking for. I'm looking to see these patterns emerge. And what I'm trying to catch as a trader is these zones of sideways. Now, I call them a box. Some people call them consolidation. But to do this, like trading is really, really hard. The concept is really easy. You just click a button. But it's really hard. And what makes it so hard is your emotions. See, the secret to trading is you have to be like poker face, unemotional, right? You're going to have emotions. Believe me, like when this recent I had my own little breakdowns after trading for almost 20 years in COVID. I was shocked at how far prices had come down to where it even, to be honest, scared me a little. Like for a second, I had a moment where I thought it broke. And I had to go back over history. Like I had to sit down and say, okay, these are emotions right now. These aren't logical. This isn't probabilities. You need to get control of this shit. You need to go back and look in history and reassure yourself that it always comes back. This is what makes stock selection so important. You need to separate stocks you're trading, and you'll see and like I said, there's a couple ways to do the money flow. One of the ways that I like to do, and most of my trading is around a core set of stocks. So I'll move in and out of Facebook. So let's say, come out. Oh, you gotta go outside. Get rid of the cats. Go. having a cat fight today. So I may move in and out of, this is an example, and we'll get to this, but let's say I'm moving in there and I'm moving out here. I don't have to take the whole thing off. I could move in and out. So on a breakout, maybe I'm doubling my position, and on a breakdown, I'm cutting it in half. And then I'm waiting for the breakout and I'm doubling my position. Now, one thing you're going to notice when you see this, look, each time that I doubled it, the share price was a little higher. And so that core position that I'm holding is climbing in price. So if you take a stock like Facebook, when I started trading this, it was $30. So if I'm holding a core of 10 or 20 shares, as the stock price goes up, what's happening to my core that I'm trading? It's going up. This is a big concept that I don't think people get inside of the money flow. It's you can move all in and all out. You can trade like that. And there are stocks that I do that from time to time. But there's also plenty that I'm going to hold. Let's say like I got stopped out here and I'm down to like I'm down to my core position. Let's say it pulls back down here, sets up, and then I got to do this game over again. Let's go back to that OPK. That's one way of using the money flow. But what the basic strategy is giving you these turning points. And as you get better at identifying these zones of consolidation, now not all of them are going to be this pretty. I mean, this one just set up perfect, right? Where you see these, well, and this one was right here, but it broke out here. So let's take this off. And so when you'll see that pattern, right? You see it where it goes sideways, runs up, goes sideways, runs down, goes sideways, runs up, goes sideways, and now what? Runs down. And so as we began to look at this, as a trader, I've got to understand prices come down. And I can't get emotional about that. Like if you're getting emotional about that, then you're doing the wrong game. It comes down all the time. Prices can drop 10, 20% and it'd be completely normal. You could wake up and your stock drops 30%. Normal. So you have to be able to handle that. One of the things that's going to help you handle that is these attributes of being a trader. One is we have to understand our emotions. Like we're all going to get emotions. You just have to put them in check, right? Poker face. You see a guy who's really good at poker. You don't know if he has a good hand or a bad hand. He's just playing the hand he's been dealt. One thing that'll help you with these emotions is trading in the now. So the money flow is about today. Like I don't know where it's going tomorrow. I can just look at the chart today. And I'm not thinking next week. So when they say, well, what's going to happen in the election? I don't know. I would not be trading to make around that. That's just completely stupid. You don't have any idea. Now, you could say, well, I'm going to do that for fun. Okay. You can do that for fun, but that's not trading. That's gambling. And if you're ever hope that the chances of you being a successful trader are like 5%, meaning out of the 100% of people that start trying to trade, less than 5% are consistently profitable. Why? Because of these attributes here of emotions. You have to begin to create a routine. Your trading has to become literally boring. Why? Because you're doing the same thing every time. You're waiting on these buy points. You're setting up, like for whatever your strategy is. For me, that's what this is. I'm setting up these boxes. I'm closing out. Like all of this has been predetermined when I start doing the trade. There's nothing that I'm guessing on. I'm not going, what's going to happen? I don't care about tomorrow. I'm trading now in the money flow. Like what is happening right now? That's what I'm trading. The moment you start going down in the future, now we're guessing. And you can't win consistently being a person who guesses. You may get it right sometimes, but then all you'll do is discredit your own strategy. Like it may have been, your strategy may have supposed to have lost. Like you should have lost. But it's all based on probabilities. So if you have a strategy that consistently, if you follow it over time, wins, and yet you find yourself not following it, you're just shitting on your own work. Like you're not honoring your own work that you put in. So your goal isn't to second guess your own strategy, try to jump it or get ahead of it. The goal of a trader is to execute and follow the trades that you planned out. This is why so many people fail. It is really, really, really difficult to do what I just said. You will jump it. And every time you jump it, you no longer have a strategy. Subconsciously, you just cheated yourself. You just said the strategy I've put together doesn't work, and so I need to fix it every so often. And this is why sometimes you'll see and they'll say, hey, are we closing this out? No. Why? Because it hasn't broke support, but it probably will tomorrow. I know. Then I'll lose money tomorrow. So, like right here on OP, could we have closed it here? Yeah, you could jump it. You could jump the strategy, but what? It's still holding support. So if I jump it here, I no longer have a trading strategy. I'm just guessing. So my strategy is it has to break the box. Box broke. Now I'm stopped out, right? So, and you see the pattern. This is crucial, catching the pattern. The boxes can take you a minute. Let's pull up the pattern here. Did that not update? Huh. I did the newsletter, never updated it. Sorry about that. I try to keep the newsletter fairly updated. Like if you come in here and look, the S&P stage 4 decline, gold was a stage 2 breakout. I've since updated this. Yeah, we're in a stage 4 decline now. I'll get it updated today. I did update it. I just never updated it. Updated it on my end, not on your end. And so I try to track the big four, right? Gold, the SPY, oil, and bonds. And I'm trying to track them based on what stage I think they're in. Now you're gonna have where it kind of gets a little confusing. Like this one's getting a little confusing. The patterns are getting really, really small right now on oil or gold. Look, stage 1, stage 2. It didn't go very far. Now we're in a stage 3 or stage 4 decline. Will we hold support here? I highly doubt it. So untradeable right now for me. Let's see. Oh, DraftKings is the one I was wanting to look at. DraftKings is a good lesson. And, I talk about the box. And I think this is one thing that I haven't made super clear. This technically would have been a box. You see how there's enough candles there? Price created this little box here. When it's sold off, which it almost always tops out, right, on an extreme. And we went under. We're now below the 20. If you ran that across, yeah, you might have been out here. A lot of people trying to get in quickly. There's no box. Look at this. Price is just going straight down. There's no stopping this. So I would have expected price to have stopped somewhere in here because there's a previous zone. So if you have my book, I talk about when it breaks, it goes to the next level. Just like when we're going to the upside, I use the next level, right? So, but that's not a box. It's not enough days. And we've just kept going down, down, down. One thing you're going to see about the box, and we'll get it to you, if you see these moving averages, it's got to come above this first red line here. This is the 5-day moving average. So look at the configuration of these. 20, 10, 5. They're all pointing straight down. It can't go up without these changing. These all have to come together. So if you look over here, what happened? You see how they all came together? You see the turning point right here? They all came together. So you see these points of turns? They all come together. So there's no point in trying to jump this or get ahead of it. That's not a good strategy. You need to wait till this thing sets up and starts to go sideways. It could go sideways for months, dude. So you could see where it fell, came back in, and now we've created this box, right? And then price just went sideways for a long, long time. Don't rush these stocks, man. Buying something because it's gone down is not a strategy, okay? You need to buy something because it's gone down because it triggered your strategy. A stock just dropping isn't a reason to buy it. So look at Twitter. Do we buy this? It dropped 21%. It's 21% cheaper today than it was yesterday or Thursday. It's 21% cheaper. Would you buy this now? No. Why? Look at the movement. Look at the move. Look, they're crossing. Everything is pointing down. So we assume it's going to go to the next level, which would be, it broke this one, right? Where's the next one? Here. And then where's the next one? Down here. So we assume it'll come to here. Keep an eye on the RSI, and we got to let it set up. It's going to do the box, just like you saw it do here. It's going to start to go sideways whenever it, it'll eventually stop dropping and start going sideways. You want to start on a daily chart, man. Let's look at, trying to find some that are dropping right now. Okay, so Intel's starting to set up. This is a good example. This is a good example of how I use the money flow and the buy and hold strategy. So I own this stock, right? Stock's had some problems. So when do I want to buy this stock? Well, I want to buy it after a huge move down. So if we're looking at the pattern, hold on. If we're looking at the pattern, right? I mean, do I want to buy down here or up here? So I want to buy after a big fall and it starts to go sideways. These levels, this level, you'll see me talk about these stages. Stage 1, stage 2 is the breakout, stage 3 is the topping, stage 4 is the decline. We don't know how long these levels last. So when something starts falling, I don't know. It could fall for a fucking month. I don't know. Maybe 3 days. I don't know. It falls until it goes into a stage 1, right? We don't officially know it's a stage 1 until it breaks out. But you can begin to see it develop. And so that's where I talk about needing 4 candles. So what I'm talking about is I need 1 day and then another day and then another day and another day where it holds after a big fall. Ideally, the RSI indicator is going to be extreme. And that's what we see here. That's what we see here. So we've had this big down move, right? And you can see the pattern. I mean, it's not super clear. Sideways, stage 2 breakout. There was your stage 3. Now we're in stage 4 decline. And then what? We're starting to go sideways. We've got 1 bar. Mike could count that red one. I think you're being a little generous. Histogram's turning, and we got the extreme RSI. Now, this is a great spot to buy, to add to your buy and hold. But here's the thing. We don't know that this is done going down. The fact that it went extreme tells us that it's likely done going down, at least for a minute. So we can start accumulating shares here. But it's not a breakout, right? Like this is, we're trying to catch the bottom when we start doing this technique right here. We're starting to catch the bottom. Same thing happened here. Look, RSI extreme. See it? RSI extreme. Price falls. We wait for it to start going sideways. Look, MACD comes in. So we're going to need to see this come in. This same pattern sets up over and over. And then what? It ends up breaking out, runs up to the 200-day moving average. Boom. If you ever hear me talk about these bread and butter trades, this 200-day, whenever you get a dividend stock, always becomes a great target, man. Always. They run up and hit it, man. It's crazy how accurate that is. You know, it's just finding them. So whenever I get these in my buy and hold portfolio, like if I get one and it's a solid company, falls below it, I'm really looking to load that stock up. Like Gilead. Look how far the 200-day moving average is away. This is a dividend stock. So I'm looking for this thing to eventually stop going down. It's starting to set up. Look, we got red. I wouldn't call this a box yet. Look, that has not begun to turn. So there's no need to step in on this. We just wait. It's not setting up, you know. We just wait. What's a good one for trading? Let's talk trading now. That recently set up Groupon. So this is a trading one that we just recently set up. Now we're coming into the election. What do we do about that? Well, I don't trade the future. I trade the now. Sideways, breakout, sideways, breakdown. Started to go sideways, came down a little bit, and then what we call back into the box, meaning it fell out of the box and then came back into the box, which is super bullish. And you'll see it did that over here too. Came back into the box. What I mean by box, meaning this little, it came back into this zone here. So look, came back into this zone here. Did that last time it set up, right? So we have the same setup. Now we do have headwinds ahead. What? The S&P 500's in a downtrend. We're coming into the election. You know, so there's risk there, right? And I have a stop right here. Why would I put a stop right there? Because if that breaks, I mean, structure's broken. If that breaks, I assume we're going down to the next level. Where's the next level? Well, it's way down here, right? So a stop goes there. If this breaks, I assume it's coming down to here. So that's how I'm trading this. So I'm coming off. That's obviously my stage 3. It was confirmed right here. This is obviously stage 1, right? It was confirmed right here. So we're taking a shot. This is stage 1. I was hoping it would be confirmed right here, and then the market got donkey punched. So we're still in the box. I stay with the trade. If we get stopped out, that's good trading. Like losing's part of trading. It's where the emotions come in. It's where the routine comes in. It's where the discipline comes in. Like this is a game of probabilities. So the reason my target, it's a game of probabilities. So my target's right here. Why? Well, that was a little box area and the 200-day moving average. Price is attracted to it. You don't believe me? Look at this. See it? Price came right to the 200, stopped, went down. Now I fully anticipate price is going to come to the 200. Price is attracted to where it's been before. Price has memory. I talk about this in the book. That's how you get support and resistance levels, is price has memory. It can remember where it was before. It gets hung up. So other people see that. I'm not the only one that sees that. So they start selling the same thing. And it creates this ceiling, or it creates this, like you can see the double top here, right? Let's put this on a weekly. So we saw that on this is a weekly chart, but look. That was the previous high, and look where the run ran up to. Previous high. Now, it could keep going. I'm not saying it can't keep going, but what I'm saying is price gets hung up on previous highs. Look all the way across. Every time it would run up to the same spot and then turn down. This is on a weekly chart. Look at this. What is that? Price has memory. Price has memory. Same to the downside. Price has memory to the downside. So if this breaks, I fully anticipate it'll come down to here. And if that breaks, I fully anticipate it'll come down to here. And so I'm not trying to guess. I'm just using probability. Price will go where it was before. Why? Because it's easy to go there. It already knows it. It's not a big deal. And you'll see this. This is why this pattern will play out. Because when it sells off, it's coming down to previous lows. And it just zones that it's been before. Look at this one. This one's pretty clear. Look where it got hung up over here is where it got hung up here and here. So these zones, you know, there's a little bit of art to it, but what you're trying to do is not necessarily predict them, but see them. Like once they start occurring, once the price starts to go sideways, you're like, whoa, that's a level. That's a zone. That zone has worked before. So cool. And then it broke it. That's a little discouraging, but when it came back into it, super bullish. And it was breaking out. So, yeah, this is Groupon. So, we'll see. They got earnings on the 5th. What is that, Thursday? That should be past the election. So keep the position small. Trading is about keeping your position size small. If you want to trade forever, you should make that decision right now. Like, hey, I'd like to trade forever. Then that means you need to stop doing dumb shit. Okay? If you want to trade forever, there's no guessing. Like, no professional traders wake up and go, and then just do something. That's not how they do it. It's all planned out and plotted. You're tracking particular stocks. Hedge funds are working on particular theses, like, oh, we want to get into the battery game. So they start tracking 4 or 5 battery stocks, maybe a large cap, some small caps. They start putting them on this, looking for the breakouts, right? I'm not just buying shit. I'm buying shit when it sets up at just the right time, right? And so I'm following all of these different stocks. So let's say, Kathy Woods is a very popular stock trader. So I can sit here and follow her portfolio. Like, I didn't even have to do the research. She did it for me. And you could sit here and put them on here, and what are you waiting for? Well, listen, they cannot go up. They cannot go up unless this moving average configuration changes. The 10-day, 5-day, or 5, 10, 20 have to be numerically aligned in order for it to go up, okay? Same to the downside. So this is a stock that she likes that's now going down. What could you do? You could track it. What? Wait for it to set up. Wait to buy the breakout. Let it run up, scale it up on the RSI, wait for it to cross, cut it back, right? Cut it to half, get completely out, whatever your strategy is going to be. Here's another one, AD. I don't even know what this company is. So look, what's it doing? Selling off. So where do I anticipate it coming? Previous level of support. So probably right down in here. This is some Japanese shit there. What else? Oh, look at Amazon. Where do we think Amazon will go? Let's look at this chart for a second. What stage is Amazon in? Stage 4 decline, right? The pattern got real tight here recently. Look. Sideways. Stage 2 breakout. This is a real tight pattern, dude. Look how this is fucked up. This is real tight. It's hard to trade, but look where it went. Previous high. Stopped. Why? It's called resistance. Support and resistance. Price has memory. What do you think it's going to do on the downside? Same thing. Look at this. Price has memory. Stopped here before. Stopped here before. Where do you think it's going to stop? Where it was before. Will it stay there? I don't know. But we'll keep an eye on the RSI and let it set up. But if that's where it's going to. So if you were like, well, I want to buy, say you wanted to buy on Friday because it's on sale. Well, that's dumb. It's just now going down. Everything is pointing down. So you see the little advantage it just gave you? All 6 indicators of money flow are pointing down. What does that tell me? I need to be patient. So now I can wait. I have a strategy for getting in, right? And I can wait and let it set up. It's going to stop dropping and go sideways. And then it's going to break out above this green line, and then it's going to run up and tag the art, like the same pattern over and over and over. Let's see. What other stocks does she have? So we could sit here and just stalk them. You could follow Ray Dalio like anybody. Ooh, look at this one, API. This is an interesting stock here, man. This might be one you keep an eye on. But go through her portfolio. You can see what stock she's looking at. CRM. Some of these tech stocks got a little weird, the patterns. Like, I wouldn't trade this. Why? This isn't a money flow trade. Look at this. All I see is just shit. You see, I don't see a pattern on this. So look at this chart compared to Groupon, right? So look at this. So if you showed me this and go, Joe, what do you think? I think it's shitty. Like, I think this is terrible. Why would you even look at that? You can't make heads or tails of that. But now look at this. Do you see the difference? You see the sweeping moves, right? Or a Snapchat, you see the moves? So I'm not trying to make stocks fit. I'm trying to find stocks that fit. Does that make sense? I'm not looking to make a stock fit. I want stocks to just fit. So if I look and it doesn't do long sweeping moves, then fuck that stock. Why are you buying a stock that can't be traded? Now, if you're just buying and holding, Okay, buy and hold it. I mean, you just wait till the RSI is cheap, but you see the difference in how this moves versus AT&T. Look at this. Like, this is just not moving. I mean, this is $2 from here to here. $2, and it's taken 3 months. That's untradeable. You can't trade that. But in 2 months, Snap has gone from $22 to $40. That's a 100% move up. Do you see why I might want to trade this stock but not trade to AT&T? So when I look at, that doesn't mean I don't want to own AT&T. I want to own it, collect the dividend, but I'm not trading it. It's not tradable. This is tradable, okay? BYND, look at this. Look at this moves. Look at these patterns. So where did we get out? Right at the top. Started selling shares right here. Why? Hello. Isn't that right out of my book? When this happens, you start selling shares. When this happens, it's almost always the top. So whenever you see this appear on a chart, if you're buying stocks, you're a dumbass. You do not buy stocks when this goes extreme. If you're doing, I'm telling you, if you don't ever get anything out of anything I ever teach you, if you will just understand the concept that you should not buy a stock when the RSI is over 70, and you should consider buying them when it breaks out above the green line. If you just get that basic concept, you'll be okay. I mean, it's a foundation, okay? It's a foundation. Never buy when it's on extremes, okay? Unless that's your trading strategy to buy breakouts that are on extreme and hold them a very short period. If that's your strategy, then cool, okay? That's not what I teach. So where's Beyond Meat coming down to? So I sold all but 5 shares. Do you see the pattern? Stage 1 breaks out, stage 3. Now we're in a stage 4 decline. Where's it likely to come? Probably all the way back to here. Probably all the way back to there. It's where I fully anticipate it coming to, right around in here. Now, it may not make it that far, right? We don't know. But until the MACD turns, until any of this starts to turn, this is not even up for consideration. Like, you should not be buying this. This needs to stop. This will turn, right? Just like it did over here. It'll start to turn. And what do you see? It starts trying to break out. The sideways action starts. And so, you know, that's what we're looking for on Beyond Meat. I'm really excited about this one coming down. Made a chunk of money on that one. Look at Roku. Roku broke the box. Where was the box? Hello. Anybody that was buying this is a complete dumbass. Like I say this every week. Look what happened. Anybody that was buying this stock right here, please don't make that you. Please don't do that. Now, does that mean it's not going up? No, it's not what I'm saying. But it almost always means it's not going up right now. That is calling a top. Now, if it's a runaway trend, look what happens. You'll get it, and then what does it do? It goes sideways, 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 sideways. And now what? It breaks out. Look, where's the RSI now? You see that? RSI extreme. It doesn't have to go down. So don't think that's what I'm saying. It doesn't have to go down. It can work it off on time. That's fine. What is that called? If we're looking at the 4 stages. All right. This is where the Illuminati gets mad. If you're looking at the 4 stages here, which one goes sideways and then breaks out? Accumulation, right? Distribution means people are selling it and then it breaks. So distribution, accumulation. Distribution, accumulation. This is accumulation. Look, it just kept holding that support line. See it? And then what happens? Rips higher. What's happening here? Distribution. People are selling, and then it broke. So where's it going to come down to? Probably, I don't know, right around in here maybe. What indicators am I using? Wayne Jr., you need to buy the damn book or go look on the newsletter. Do some work, bro. Don't make me spoon feed you. I need to come to your house and hold your hand and whisper it in your ear. Do a little work, bro. Go down the rabbit hole. But it ain't about the indicators, man. The indicators are just the scope on the rifle. What it's about is the box and the stages. So when this box broke, that's super powerful, man. When you get stocks that draw these beautiful boxes, did my damn thing just lock up? Look at that. I'm running dual monitors. Sometimes they get locked up. Hold on just a second. Come on, man. Yeah, this is stockcharts.com, bro. Penny, dime, quarter. So we got a lot of good stocks breaking here. So what do you want to do? You want to stock this, man. Let it come down, let it come down, let it come down. Let it go sideways until this turns, until we get sideways action. Look at all this sideways action before it exploded up. Same on DraftKings. That's what we're looking for. The pattern is really about the sideways up, sideways down. And when you see that, all the 20 is doing is helping us determine that. But this one was so clear, you didn't even need the 20, right? Like price just broke the box. But sometimes the boxes aren't as clear, so the 20 will help us. So as a general rule, this 20-day moving average, if price is above it, it's bullish. If price is below it, it's bearish. Here's an exception to that. Whenever it goes sideways, see that sideways action? That means the indicators are of no use anymore. That means they went dead. They're flat. They're dead, okay? Once indicators go flat, well, not on this one, but once these moving averages go flat, and the RSI flat, you can't use them anymore as far as price being above it or below it. You have to, at that point, wait for breakouts of the box. That's why the box is so important, man. So there's about 6-7 parts to all of this, man. Hey, man, fuck your stocks. I'm trying to teach you something right now. You guys in your stocks, man. I'm trying to teach you about distribution, accumulation. You guys are talking stocks and don't even understand this. Worried about investments. I'm trying to teach you the pattern here of what you guys don't know. Like most of you think you know it. You don't know shit. You don't know this at all. And you're worried about stocks. What I'm trying to teach you is how to trade for life. Like you can trade for life, not temporarily, not when the market's going up, but going down. Matter of fact, I'm done with this shit. All right. Too much bullshit. You guys are chatting away. I'm trying to show you about accumulation, distribution. So you guys are done talking puts. And where's the SPY? That was our sell signal, right? So this is what the 20 helps us do. When price is breaking out above it, bullish. When price is breaking below it, bearish. Yeah, my man said stage 4 decline. We're breaking out over here. So on these indexes, you're not going to get these clear patterns like you get rarely where you get like a super clear pattern like you get on, say, Snapchat or OPK. You're just not going to get it because it's made up of 500 stocks, so it's all over the place, right? So our downside target on the S&P, where do I expect it to go? Previous level of support. Like right around in there. We probably could have took some off of this short on Friday, but I'm longer than I am short, so we're going to give it a little room. There's still plenty of room on the RSI for market to come down. The momentum's still to the downside. Everything's pointing down, down, down. Everything's pointing down, 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 down. If this level breaks, and if you look, that level comes across, right? Pretty cool, huh? See how that was a level before? See how that level held, and then it held on this one on the way down? So when it broke on this stage 4 decline, where did it come? That previous level. It's pretty cool. It got hung up on this one. That was kind of a level, and then it dropped to the next one. Same thing will be here. It'll come to this one. If this one breaks, it's going to drop to the next one, which is probably right around in here, which is so close to the 200 that wouldn't surprise me if it comes to that one. If that one breaks, what's the next one? Same thing. These levels aren't perfect. They're very similar. So that's a rule of thumb. If this level breaks, I assume it's going to that one. If that one breaks, I assume it's going to this one. I assume that's what it's doing. So probabilities. So one, as a trader, we got to control our emotions. Whether you win or lose, it's a game of probability, right? If you're trading. Routine. It's got to be the same. It's not you talking to a friend and you get some idea. And you may talk to a friend and get an idea. I talk to friends and get ideas. But then what? I got to bring it to the charts, and it's got to set up. So I make the exact same buy signals each time. If I buy it, it's because it's doing the exact same thing. And through that repetition, that is, I promise you, the only way you'll ever be successful at trading. I'm not talking buy and hold. Buy and hold, any monkey can do. You just buy it and hold it. That's not complicated. That works. But we're talking trading, price action, of it moving up, getting out the top, scaling out, bringing down, getting in on a breakout. Like if you're going to do that game, it's a game of probabilities. You're going to have routines, the same reasons to buy and sell every time. It should be boring. Like if you notice, I don't even usually do anything till about 11. I don't even look at the charts. The market opens, I don't open my account. Why? Because it's all amateurs at the open, man. I'm more concerned with what happens at the close. That's what matters. Bunch of shit going on in the mornings doesn't mean much to me. Now, every once in a while, I'll break that rule because I have to. I got something going on. I'm not going to be there at 11. I won't have time to check. I may have to break my own rule. But as a general rule, I don't log into my account or do anything till about 11 o'clock. Why? Because it'll influence your behavior. And I'm trying not to be influenced, that's the pattern that I've settled in. Most of your professional traders are trading in the afternoons. After the market does what it does, then they look for their spots, make any changes. A lot of times you'll get blown out and then the market will turn positive. Like over here, you see market open, shot down, comes right back up. That happens all the time. You'll make a lot of mistakes in the morning and then it'll turn around on you, or you'll close something out and only to see it come all the way back. That'll help your trading if you push out making trade. Now, sometimes I get it. There's exceptions to this. I get it. But as a general rule, a lot of these things are just general rules. For me, it's 11 Central. And that's not a magic number. That's just like before lunch. So it kind of lets me see everything that's going on. And then around 2 to 3 is when I'm really looking. 2 to 3 in the afternoon, if I can. If you can't because of work, you can't. You just have to work around it. You can work around it, man. You can work around it. Let's see. We already looked at Groupon. Some of you guys are in that trade with me. Very possible we get blown out because of the election. So if you get blown out because of the election, to be honest, man, I may pull my stops. You know how many times I've seen it where price drops? If Biden wins, they're saying it's going to drop by 6%. It won't stay there. It's going to come right back up. I don't know that I would have too many hard stops on election day. I mean, it's a decision you're going to have to make, A lot of day traders would wait. They're not going to be in the market, obviously, but I'm not a day trader. Yeah, so the election is a price shock. I mean, it's going to be a price shock, like a 9/11 event. That's just the way they go, man. Um, I wouldn't try to game it. You can. If you game it, you're just gambling. You're not a trader. You're just fucking gambling, dude. You might get it right. It's no skill set. 50-50. Now, am I against that? No, I'm not against that, but I'm trying to be a professional trader and I'm trying to limit doing dumb shit, okay? I try to trade as professional as possible and not play games much and try to limit myself doing all of that as much as possible. Trading's hard enough without me doing dumb things. And it's really easy to do dumb things. And that's all about emotion, you know? And I want to be disciplined and I try to trade in the flow that day. I don't care about Tuesday or next Thursday. Like what is this telling me right now? That was bullish. It was breaking out of a stage one and then we pull back. We haven't broke support, so I stay with it. It's bullish until it breaks, you know? Um yeah, there's probably more whipsaws during the market turn down for sure. If there's a price shock, a stock that I'm looking at buying is Iron Mountain. Like if we get blasted and Iron Mountain falls massively, this is a stock I'm looking to buy. I would love to buy it at $24. And I would make an exception to any rule about waiting till it goes. I mean, I would probably dip my toe in on any massive price shocks. He said he booked him. Yeah, yeah. They call that power hour, man. So let's look at space. Yeah, it's unbuyable, man. If you're following the money flow, your MACD tried to turn, but look, it's still bearish, man. If you look at that, it's still bearish. Momentum still to the downside. Can't buy this. Not if you're following the money flow. Well, I would trade the same regardless. The only thing I'm saying, you know, if we get a price shock, I wouldn't be trying to trade it. But if you had some stocks in your buy and hold that you want to pick up some shares and just take advantage of that price shock, I would. I would not try to trade it. And I know people will. GP, in the chat, you mentioned the sell-off wasn't over. What indicators did you use to determine that? Are you talking about Are you talking about in the market itself, like the S&P? Right here, man. Man, you've been on my live so many times, bro. If I go look and you ain't bought my book, I'm gonna literally come to your house and kick your ass. Like, you're gonna get a ring on the door and I'm gonna just punch you. You should know this by now. You don't have T-Rex arms, do you? Some people have T-Rex arms. Their arms can't quite reach the pockets. Like spend $80 on shoes, can't buy a book. Price closing below the 20-day. And then the 5 and 10 and 20 numerically aligned. So that was the big one. And then our target is previous low. And then the next target, we already went over this, will be here. And then the next target will be here. So whenever you see price go below the 20, it tends to go down and it tends to go to the next level. Same thing is happening here. Yeah, bro. So when we get off here, take your cheap ass and buy my book. And you will know this. And then the next level down, and then the next level down, and the next level down. Same thing. We do this every Sunday. You've been on here too many times. You should know this. You should be teaching me this shit. You should already volunteered to do it for me. Let's see. So space is, there's no stocks really right now that are buyable, dude. There's really not. There's not many. I haven't seen many. Codex is one we got in. You see what we're doing here? This is one of Mel's picks. You see what we're doing? Everything's gone sideways. You bought the book a year ago. That means you need to send it back and buy another one and pay a price for not having read it. So you see what we're looking at here? This was a stage 2 breakout that's kind of drifted and then it came back. Remember how that concept of coming back in the box is super bullish. So stage 3, stage 4 decline, there's your breakout. It doesn't really go anywhere. Drops and comes back into that zone. That's crazy bullish. Where's the target? $25, $26. So we're long this. So you might check out Codex, however you want to say it. Coda. Remember Brother Bear? Put the stop right here. If anybody had a kid, about the time I had a kid, little Brother Bear was the big hit. So stop would be right in that range. Where's our target? Right up in here, $24. So that's one we're trading. PLTR, let's see. We got an IPO here. No, I'm not a big fan of IPOs. Let's see. Yeah, you're over the 20. I would drop this down. Let's try to double the candles here. I guess I don't know anything about it. Let's see. I add to the book all the time. And no, I won't send you another copy for free because I added to it. I'm always adding to the book. Let's see. I had a guy the other day. He goes, "Hey, man, I heard you added to the book since I bought it 2 years ago." I was like, "Yeah, we're on edition 2. Could you send me that? I bought it on Amazon. Could you send me the new version, please?" Like I was just going to send him a new version for free. Yeah, sure. Hold on. Let me stop what I'm doing. I haven't traded X in a while. It's just, the chart's ugly, dude. That's the problem. You're coming into resistance here. You got a box. It's topped out. You're in a stage 3, bro. This is about to roll over. See it? Accumulation, stage 3. There's your breakout, stage right there. Stage 1, stage 2, now you're in a stage 3. See how I did that? That gave you the anchor point for the box. Now, if you can't do what I just did there, you're not trading the money flow. You're doing something else, okay? So this is a stage 3. You can see the moving averages starting to turn. See it? You should be selling this or selling some. This is about to go downtown. When that ADX line breaks out above these bands, if you read that in the book, see right here? When this ADX line breaks out above the bands, that's a bad signal. That usually means it's agnostic. That can be on a down move or an up move. Whenever it breaks out of the bands, it means it's gone too low. Look over here. Broke out of the bands, look, was the bottom. See it? When it breaks out of the bands, it usually means it's the bottom. That's what I'm looking for on that. The crossover's fine, but what I'm really watching is that. So when you get that in combination with the RSI and you have a box being built, price going sideways, MACD's rolling over, stage 3, man. See how I would analyze that? See how that works? See how intimate that is? Yeah, I've been stalking this stock. This is crap right now. This is in a stage 4 decline. Let's go to the weekly. I mean, you're all the way back to the original IPO price. Now, you remember I got onto this dude about IPOs with this stock right here. I was like, don't buy IPOs. Don't be a dumbass. If you buy IPOs, you're an idiot. Don't buy IPOs. Why? Because they all come back to the original price. Like, I mean, almost all of them. The rare exception, they don't. And look where this thing IPO'd. You remember that guy? I remember he got mad at me. He hasn't been back on since. He was telling you guys to buy it here. And I was like, don't do that. Don't do that. I've only been trading 20 years. Don't do that. Longer than you've been alive. Don't do that. Why? Because they almost always come back. Beyond Meat came back. Facebook came back. Twitter, Snapchat, Google, Facebook, Netflix. They all come back if you watch them. Why? Because they get overhyped. They overhype them. When a realtor sells your house, they want the best price possible. They're not telling people all the problems. And then you move in and find all the problems. Now they're public and they got to put all their shit on display and it goes down. And then people go, well, they can fix that. And then it goes back up. That's what happens, man. So doesn't mean that I don't want to play them. I just don't want to play them right away. Why? Because they always do this dumb shit. And this is gambling. I don't know, right? But now I got the 20. Now I got my indicators. Now I can let this thing set up and we can ride it. And what will our first target be? It'll probably be, $24 and then $31. Now this can end up being a very profitable trade within my strategy. I'm not saying that IPOs might not work. I trade an exact strategy. It never deviates. It is boring and it's always the same every day. And that's why it works. Yes, I'm telling you, if you avoid them and let them come down, they all come down. They all come down. Even Tesla came down. They all come down. Let's see. That's my rant about IPOs. Let's see. BXRX, I took a hit in this too. What do we do with this stock? Well, if I was you, I would go read on this. Go read on the company. Try to understand what happened and ask yourself, can it recover? If COVID happens, if we get shut down again, this company's in trouble. Look, you see we're outside the bands. The histogram's turning, and we're on the extreme. Ordinarily, I would tell you that's everything we're looking for, right? But the stock has really been donkey punched, man. It's really been donkey punched, man. I don't want to tell you to buy any more. I really don't. I will buy more. That's all I'm becoming. You know what I'm saying? Like, I'm gonna buy more. If COVID hits, it's gonna be a real problem. I would not buy. If we shut down the hospital, if we're not doing any elective surgeries, these guys make their money from people doing surgeries and stuff. So, if things get back to normal, they should be okay. If things don't get back to normal, I don't know, man. I don't know what to say. So, you're gonna have to make your own decision on this stock. I'm going to dribble in and take a shot at this point. Most of the time that works out. They're not talking bankruptcy or anything. This is not AMC, not yet. They haven't said anything like that. So, go read on the company and try to see if you can make some sense of what's going on. What was that? Is it LYN? No, HYLN. Yeah. I was watching this one too. You see that he sees the pattern. That's what he's looking at. You see it? Look at that sideways. That's what you're looking for, dude. That is, when you can get that, you see how tight that box is? Look at that. And you're going to get this a lot on these stocks that do these massive moves. I want you to notice something. It never came back to the extreme RSI, but it came back to like the 50. And sometimes that's all you're going to get. And then look, when you start getting this long where the histogram's going the other way and that stock is going sideways, you got to take a shot, man. You could wait for the breakout, which is this day here. And then where's the first target? Previous high, right? That pattern, oh, sorry, YouTube. That pattern is over and over and over and over. Like, my trading is boring as hell. It goes up. Oh, got my attention. I'm not buying over here. These are dumb people buying up here. And then I'm waiting for it to sell off, start to go sideways. Now I'm interested because I know the stock can rip, right? And now we get in, and I got a few of these going right now. But look, here's the problem with these. Look at this long downtrend, man. Goes extreme. There's your anchor point. That probably would have knocked you out right there. Could have got you back in, and down we go. So yeah, I see what you're looking at. It's right at that previous level of support. MACD's going this way, and we're on the extreme. I like the setup, man. You need to see a little more of a box, though, dude. There's no box. Not yet. You see what I mean? We need to see this. We need to see a little bit of this. Like 3, 4, I mean, you might even give it 5 days. It ain't like it's going to run away on you. And this thing, if it gets back to $60, oh my God. Who is this? HYLN? Do we got somebody spamming? Oh man, what's going on, man? Oh man. Boom. He's gone. Took him out, Mel. Yeah, we got to get a little more sideways on this. I like it, though. You see how they're coming together? That's the power of the moving average. If you're in my boot camp that we're doing, we haven't got to moving averages yet. When we get to moving averages, it's kind of fun. When they converge, you know, a lot of people think of them as buy points. It's really points of conflict and chaos. It's where bulls and bears are coming together, you know. So it's not always a buy signal for, you know, these are points of conflict as these come together. We got some buy and holds that are getting smashed. We got Exxon. I've been picking up some Exxon. Let's see. Where's JCOM? Ooh, a lot of sideways there. Where's Exxon? Exxon's trying to build this little box. Came back in the box. Ordinarily, I'd say that's pretty bullish, but oil's getting donkey punched. I still like it. You know, I bought some last week. We'll see. We'll see. All the byproducts of oil, like ET. I like ET. We'll see. They've cut the dividend. That's good now. The famous barber's in it. You're in it? Better be careful, bro. You might go downtown. He said Netflix is setting up? Let's see. Yeah, look at that support level. Look at this level, dude. Netflix has gotten kind of boring. Like, it's almost untradeable right now. Look. That is right out of the book. Support and resistance. Look at this shit, man. Think price doesn't have memory? Look at that. How does it know to stop here every time? Crazy, huh? And that zone is literally the top of the previous zone. So the last time it got caught doing this, now it's just moved up and doing this. Look at this. So it becomes real hard to trade this with the money flow. Not I don't want to say impossible, but it's, well, not really. I mean, there's your breakout. There's your target. There's your breakout. There's your target. Man. Yeah, I mean, if this holds, you could take a position. I don't really use the 50, but yeah, ABC, I've been warning for a while. Stay away from these pot stocks, man. Although this one's setting up, but I don't like them. They always seem to go down. We're a couple. Where is it? I mean, a lot of these stocks are coming down. EVRI. Not too bad. Hanging in there. RMNI is a new penny stock that I'm playing. Ripped higher, and then we pulled back. We're still in this little box area, so we'll see. My stop is down here. We'll see. Hopefully it holds. It kind of ripped and then pulled back, so that sucks. A lot of analysts have a $6 target on this stock. IG keeps kicking you off. I don't know what's up with that. What is the name of that Israeli stock that we were looking at? Do you remember, Mel, that Israeli stock? RMCI? No. Anybody in the chat room remember that Israeli stock? Can't remember the name. It's a penny stock too. Of course, Polo had a big move. This could be ready to run again. I'd keep an eye on this one. $6 target. No, Mel, that one that I put in the chat room on Friday there toward the close of the day. It was an Israeli defense company stock. It's based in Israel and America. God, what was that ticker called? Had a big ass move on Friday. No, it wasn't RMN. It was one I put in there at the end of the day. Nope. That wasn't it. Hold on, let me see if I can pull this up over here. Hold on, let me pull a money trade account over here. Just, you guys might keep an eye on this one. I liked it. Big move on Friday, though. Yeah, Watt is definitely on my list. This is one that, but I thought it was stabilizing. It's not. I haven't gotten stopped out, though. Oh, MICT. MICT. This one broke out in kind of a big way. Breakout may be a little premature. This was the box. It broke out. There's your box, stage 1. $6 target, or $5.50 actually, I believe. So, will it make it 80% higher? I don't know. It's done it before, so, and that's the pattern, right? Everything's going that way. We'll see what happens. Hopefully the election doesn't donkey punch this. That's MICT. MICT. This is just what I was checking out on Friday. You said craft, huh? Yeah, I mean, I bought some craft when it came back down here. See what I'm looking for? RSI starts to go sideways, wait for the MACD to turn. I throw a little bit. This is in my buy and hold. So I'll just throw I buy a couple shares. And then the next time it does it, I buy a couple shares. And the next time it does it, I buy a couple shares. And I just do that my whole life. Like that's how I handle buy and hold. Could you trade these? Yeah. If one of my buy and holds really starts setting up right, like you can see nice movement, I'll trade them. Yeah, LIVX was another one. Penny stock we're looking at. But fuck, it's going the wrong way. So a lot of these were setting up with boxes that have pretty high analyst targets, and then they're just breaking down. So yeah, waste management's a good one. That level may hold. Might keep an eye on this one. It's too soon yet, though. This has got to turn. This has got to turn. It's at a level, though. So I don't know. That's just not a lot of move for trading. Maybe, you know, maybe. It's just not a lot of room to the upside to trade, but it might. I mean, this thing can move. We've seen it move, but TTD. Oh yeah, there we go. See what he's looking at. Trade us straight up. Look at that extreme. Goes into the box. You had all the time. So if you get a stock like this, watch, and it does this, right? You get that movement. And you've had the RSI go extreme, but it kept going, obviously. Kept going. I mean, whoever was buying this was just a complete idiot. I don't know why anybody would have. I don't know who that would be after such a big move and the RSI is so extreme. I don't know who that would be. Somebody was buying that. And then you see it going sideways. When that rolled over, when that MACD rolled over, look, what is that telling you? Momentum is changing, man. That's your warning signal. If you've got some profit, if you're trading this and you want to get it off the table, now's the time. I mean, it gave you a long warning sign. That's using that MACD is really what you're looking for, the rollover and the difference in the histogram and these stages. So look how obvious this was. Stage 1, look. Histogram turns up. There's the roll, which would have been right around in there. There's the stage 2 breakout, rolls up. I mean, this one's classic. Look at this. It's literally trading it perfect. Like you could scale in. This is that same pattern as waste management. Look where it stopped. This level here, right? But RSI is not extreme. So if we look at waste management, that's what you're seeing. I'm not a huge fan of those, but sometimes they work. You saw it in the last one. Look. No, that's Walmart. Come on, dummy. WM. Look where it's stopping. Previous level. Look at it. Almost on the T, right? Look at that, man. So this level so far is held 2 times. You need this to turn, though. It's what we just showed you in the other one. This has to turn the other way. The histogram has to start going that way. It did over here before the move. That comes before the move. Until that happens, there is no reason to do anything. Oh my goodness. You see how we use all of these to try to interpret what we're seeing? But price is most important. Like what got us to even look was this level holding. Like that's it. That's the most important. And then we check the RSI and you say, well, yeah, it's pretty low. Then we come down here and go, well, no, not yet. Not yet. Can't get in it yet. And then if this keeps holding, what do? We start taking little nibbles at it. And then on the breakout is when you buy the most. That was a breakout. So on the breakout, you buy the most. Cisco kid. Come on, man. Cisco setting up, huh? Below the 20. This is a bread and butter trade. I like it. Beat up stock. Things going bad, like Gilead. It's too soon, though, right? Same thing. What do we got? We look at the RSI. We like that. Low. We like it. Low. We like it. See, it was the bottom. It came back up. We don't know how long the ups last. We tried to play this last one. Didn't work. Got stopped out. Still in my buy and hold, though. Look. Not there yet. Not there yet. We need some sideways. If this level holds, though, start nibbling and then add on the breakout. Target's going to be $40 if you want to swing it. If you buy and hold though, wait for this to turn. Once that turns, you can start buying, man. But remember, this thing has faked us out. Look, I would have told you that right here. This is a losing trade right here. Look, boom, extreme. This is how it should. I mean, I just want you to see, like, it doesn't always win. It loses. And this, I would have told you, like, look, everything was going, the histogram's going up, price is going sideways. We're on the extreme. I would have told you this thing's going higher. There's your target. And look what it did. It broke the box. So if you're trading, you get stopped out there. And then it didn't work. Man. So we got to keep that in mind on Cisco. For sure. Yeah, we'll look at one or two more, and then I got to go paint a house, man. I'm trying to paint the outside of this house before it gets cold again. I got a lot of inside to finish. Oh, yeah. Here we go, bro. What is this? HUYA. Sounds Japanese. Turning Japanese. I really think so. Is this Japanese, bro? Hua? Korean? You see how this is super bullish. Look, broke the box, came back in the box. Super bullish, man. You could take a position in this right now. Everything's turning. ADX hasn't yet. Yeah, MICT is that Israeli stock we went over. I like the setup. It tried it here too, though. It didn't work. Oh, it's Chinese. You know I don't like Chinese stocks, man. Can't trust them, bro. Can't trust them, man. Let's see. Yeah, Pfizer got blasted. We got to give Pfizer some time here, see if this level holds. The problem with Pfizer and the reason up in this area is Pfizer's valued at $39, $40. So whenever it hits this area, it just falls apart. If you, on that last one, I didn't take it as a swing trade. I have it in my buy and hold, but I didn't swing trade it because this zone for a while, for like a year now, whenever it hits it, it's just, it turns down. So obviously I don't know the future, but as you're allocating money, I'm just like, man, the thing's got a $39 value. Yeah, it broke out here. It's heading, it just didn't feel worth it. Didn't feel worth it. I do own it in my buy and hold, but as it comes down lower, now I'm getting more excited about a swing trade because the value is much higher. So even in swing trading, I'm looking ultimately to trade it to the true value of the stock, you know, if I can, ideally. Yeah, Square fell apart. I'm down to a core and Square. This is beautiful. Should come down to about this 140 range. So you see how I just assume that's where it's going to go? I just assume it's coming down in here. Why? Did it here? Did it here? Did it here? Did it here? So if it gets there, I would assume the RSI will be extreme and maybe this will start to turn and we'll go sideways and we make a run and do another swing trade, you know? We'll see. It's not a buy right now. You got to read again, bro. You got to read it 100 fucking times. You got to read and reread. Read and rewatch. Print off charts and draw the levels and take them to bed with you. You should wake up with charts beside you. Your wife or girl's like, "What? Get these out of the bed. What are these here for?" And you're like, "Because I have to read my charts. Maybe if you moved, I'd have more room." Let's see. Didn't quite hit it. Damn it, got that. I don't know about this, man. This is going down, down, down. So I see the level you were looking at here, and it started building a box in here. So what if this comes back up? That would be super bullish. Until then, I'd kind of wait it out, man. I'd wait that out. Oh. Yep, nothing there, man. Not yet. Too soon. You called your husband German. That's not good. Oh, that's not good. Oh, that's funny. I've done many of those Freudian slips, though, where it's like you just call the wrong person the wrong name, or call your friend your kid's name or something. Get your crackers and scoot over. Is that what you said, Mel? Get crackers and scoot over. A little inside joke there. A little inside baseball. Look at Caterpillar. Keep an eye on these dogs of the Dow, especially if you're a new trader. Those are fun stocks to trade. This we just can't get this down, dude. Mr. K says Brittany's freaking hot. All right, no, this is not a hookup room. This is trading room. SWBI. These gun stocks have been working. Yeah, man. I mean, there was the breakout. So if you're in this, stay long. You know, you got two options on a stop loss here. Here, which is where I would have started the trade. So if I got long on that breakout, my stop would have been here. But no, I mean, you might bring it in now because the trade's been underway, you know. This is a long ways down. RGR. RGR looks a little better. I like this one. We talked about this one on here several times. Someone's brought it up, and this is what I'd be looking for. It's a perfect swing trade. Stage 4 decline, then it went sideways. See that sideways? MACD turn, MACD rollover, breaks out. That might have taken you out, man. What do you do if that takes you out? Now, my stop would have been over in this range. That might have taken you out. What do you do in that scenario if this takes you out? That's so close. You see how it held that level? This is why when I get a breakout, I like to put the stop at the stage 1 support. Why? Because that's really when the trade is dead. Like structure was broken. This didn't technically break it. It came right to it. The problem when you do that is your stop is further back than a lot of people like to have it. So for me, then that's why I trade smaller, because it gives me a lot of room. So on this because I guarantee you, if this was a trade I put out and this thing went down for 5 days, I'd have 200 DMs saying, are we in this? You know, that's where your stop goes. But let's say you got stopped out. When it did this, you get back in. I mean, you get back in and get your money back. First target, second target. Why would I say get back in? Because that's really bullish. Getting back into the box or back into the stage 2. So you have the stage 2 breakout and then it does it again. That's super bullish for me. Back in the box, it's called. I'm trying to write a chapter on that for the boot camp, trying to explain it because I didn't really cover that in the book, the back in the box thing. A lot of, good dividends, J&J. Look at this, dude. Smashed. 154 to 130. Don't buy this yet. Look. Look. MACD's still down. You got to wait. Red, 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 red. Red rum. You got to wait, man. Red rum. This is Johnson & Johnson. Straight down. So these are cool stocks we can look at. KMB is another one. Dividend stock. If you're looking for dividend stocks. Look at this, straight down. And I like this stock. This stock trades well, too. Just KMB, Kimberly-Clark. It can trade well. It doesn't always, but sometimes it'll set up perfect. You'll see the boxes, and then it'll rip higher, goes right to the R. Like this would have been a perfect swing trade. Comes right down, look, to a box, runs up, a box, and now here we are. This is now below the 200. So KMB, Johnson & Johnson, below the 200. So remember I talk about my bread and butter trade? These are dividend stocks trading below the 200. Gets me very excited. We got several of these now. Gilead is one. Cisco is one. So I'm going to be tracking all of these for swing trades that are low risk, pay a dividend, and you can swing trade these and you shouldn't get blown out of the water. So KMB, J&J, Cisco, Gilead, these are all 3-4% dividend yielding stocks that are getting smashed. Let's look at IBM as one. IBM, one of Mel's picks. Big bounce off the bottom though. That's what you call a V bottom. But look, if this comes back again and holds this, that would be 4. That would be 4. So let's say it comes back, which it probably will, right around in here. That'd be 4 days, right? 1, 2, 3, 4. MACD's going, or histogram's this way. You got the extreme. You could take you a little position, and our target ultimately is going to be that 200-day bread and butter trade, a dividend stock trading below the 200. Now, does this thing come back to the 200? Oh my God, look at this. Look how many times that thing tags the 200. So you see how like I get excited when it falls way below it. It is attracted to that line. Institutions care about that line. Institutions care about this 200-day. Has it ever been there before? Only every time it went below it. Okay? Look. Went below it, went to the 200. Went below it, went to the 200. Went below it, went to the 200. We still follow the money flow. We wait for the, you see what I'm saying? I'm still following the strategy, but my target on this is the 200. There's a whole shit ton of these right now, but they got to pay a dividend to be a bread and butter trade. Visa, that's a big one. It's below the 200. A lot of these stocks, dude. A lot of them. Ulta doesn't pay a dividend. I would trade this, but it can't be a bread and butter because there's no dividend. All right, guys. We got a bunch of them. You guys be good. Procter & Gamble may be one. You know, pick a few of these. See, that hasn't really come down. Look how far above the 200 that is. God, that's been a beautiful run though, huh? Look though, just to make my point clear, this was a while ago, but look what happens when it came back to that 200 from below it. It gets stuck. That's why it becomes my target. And those are just simple swing trades, man. Just super simple swing trades. Quality company, you know, a boring company below it. The further below the 200, the more excited I am. I mean, if it's right there, come on, that's not much of a trade. But and because those stocks trade so slow, I really want them to be below it. Cisco setting up. Intel's another one. You know, these are not the fastest moving stocks though. But look, when it did it over here, where did it come back to? Right to the 200, man. Look at that. Touched it, and then it was downhill. Downhill from there. So we should be able to catch it again. Beautiful. All right, Mel. Thank you. You guys be good. I guess we'll share that to IGTV. What's up, YouTube? Yep, you guys be good. Keep an eye on a bunch of those 200 trades. You may find a lot of good dividend stocks doing that. Even in your buy and hold, those are the ones you could load up on. And then when it gets back to the 200, scale out, kind of have a trade inside your buy and hold. I like to do that a lot too. That's a good way to, you know, maybe you buy a little more Intel than you would like with the goal of selling it when it gets back up here to then push to shave off that extra into a new position. Make sense? So, all right, man, be good.